Now, I want to call to the attention of the Senate. This is a New York Times story from May 24th, a couple days ago, entitled, U.S. Suit Sees Manipulation of Oil Trades. The suit says that in early 2008, they tried to hoard nearly two-thirds of the available supply of the crucial American market for crude oil, and then abruptly dumped it and improperly pocketed $50 million. Federal commodities regulators filed a civil lawsuit against two obscure traders in Australia and California and three American and international firms. And this was in the context 3 years ago in 2008 when oil prices had surged past $100 a barrel. There were those suspicions then that traders had manipulated the market, and that ultimately has led to a number of commentary and investigations. Well, the regulators at the Commodities Futures Trading Commission have now filed this suit, and they're looking into the fraud being utilized in these oil and gas markets, particularly the commodities futures markets. In the past months, I have come to this floor several times to discuss the net result of all of this, which is what we pay at the pump, and how it directly links to these oil speculators and the game they play in running up the price of oil. Using this data from the Commodity Futures Trading Commission and price data from the Energy Information Administration, we have shown on this floor in speech after speech until I'm blue in the face. We have demonstrated the direct link between the rising level of speculators and their speculation in our energy markets and the skyrocketing oil and gas prices. And so, when the top executives of the 5 largest oil companies in the U.S. testified a week ago in our Senate Finance Committee, I asked them on what role speculation played in the oil markets. And I asked them, please explain why gas prices are remaining so high when oil prices had begun to fall. Well, you should have heard the mumbling around. The truth is that speculators, whether they are active traders or passive investors, have hijacked our oil markets, and they've done this in recent years, and the American people are the ones that are suffering the consequences because the price of that gas goes up when we pump it into our cars. Oil prices are set in futures markets, such as those regulated by the Commodity Futures Trading Commission. Future contracts, and that is you buy a contract of oil at a specified price to be delivered at a future date. Those futures contracts allow oil producers to lock in prices on their future output. And those contracts also allow large consumers of fuel, like airlines, to lock in a price as a hedge against inflation and that future price swinging way up. Well, the futures markets were intended to bring actual producers and real consumers of oil together. And in doing so, the supply would match the demand. Speculators then were allowed to play a limited role to ensure that there was sufficient liquidity in the market. But then here's what happens, and this is what happened back in 2008 when the price of gas went so high. Speculators constitute now anywhere from 2/3 to 80% of the market. They're no longer a bit player. They are the main player. And this is what we need to end. In last year's financial reform bill, we directed the Commodity Futures Trading Commission to set hard limits on the speculative positions. We gave them a deadline of last January the 21st. Now we're here months past the deadline, but the CFTC has not yet finalized a rule. Now, why should they do this? Well, if you're a legitimate user of oil, say an airline, you have every reason to want to hedge against the price of that oil going way up. So you buy a contract for delivery of oil at a specified price at a future date. But if you are a speculator who buying and selling oil futures contracts, having no intention to use the oil, having only to put as a down payment a bare percentage of the total contract price, you can manipulate that price upwards by buying and selling those contracts. This is exactly what happened back in 2008. It's what's happening again as we've seen the price of a barrel of oil go up and up. Now, we passed the law last year. The commission has the authority. We shouldn't have to pass another law that requires them to do it. But, Madam President, if the CFTC cannot get the job done, then we're going to have to. And that's bottom line. The American people are outraged. Here, America is lowering its consumption of oil. Here, America is lowering its imports of oil. Here, we are getting more energy conscious, and yet the price of gas keeps going up. It's time to put an end to this. Madam President, I yield the floor.